There we go. Right, let me just put the music ever so slightly here in the background. Welcome everyone, welcome to today's live stream. Hope you're all having a fantastic day. It is Friday. We've been waiting since Monday for today. You know, that's a saying that used to in the corporate world when I still worked in the corporate world. We've been waiting since Monday for Friday. Well, that day is here. If you do have a 9 to 5, Monday to Friday, you are most probably looking forward to this little break over the weekend. Not everyone is lucky. I know some people work in the retail industry and you work really hard on weekends. Okay, but whatever your plans are, relaxing, working, I hope you have a fantastic weekend. As we know, we usually get some nice price action on Fridays before the market close. So now the question, okay, as per the thumbnail, I put a little life raft. I put Bitcoin there in a life raft. And I said, is it going to go up or are we going to absolutely just smack here to the downside? Okay. And unfortunately, the price action is at a moment, the price action is in a moment over here where it literally is 50-50, guys. It literally is 50-50. And it depends on how you count the structure. Because if you consider this the low, there's a chance that you have formed a W, X, Y. This is the high, and you're now starting to build impulses here to the downside. Okay, there's a scenario, definitely. If you consider this the low, okay, well then you want to consider this an impulsive structure to the upside. This becomes your wave 1. This has to be your wave 2. And it's already not looking great, guys, because from a timing perspective, it looks like an absolute mess. Okay, because when you measure the impulse from the low to the high, you can see that if this is 1 and this is 2, I mean, it's in my danger zone already. Usually when the structure surpasses my 4 extension, I'll already write it off as a second wave. But I need to give the bulls the benefit of the doubt. What if this is a wave 2? Okay. And this is what I told the community this morning as well. You really don't want this low to be claimed again. Because if this low, if this is your impulse and all of this is still part of a corrective structure and we find our feet and then we move up, I'm going to, even if we do move up, I will consider this move up a corrective structure and not an impulsive structure. So maybe an A, a B, and a C, or a W, X, Y. It stops and it falls down. Okay. So now we can go through the probabilities, the scenarios. Let's go here onto the 4-hour time frame. Do a little bit quickly high time frame technical analysis. I did see, guys, okay, that it looks like Andy's also going live soon. I apologize about that, but it's not always possible for us to go live different during times. Okay, sometimes we're going to go live together. Luckily, the live streams are recorded, and I know that some of you listen to the live streams on 2, even 3 times speed. Okay, usually when I go through Andy's live streams, just want to catch up on what he told the community and some of the juicy alpha that he left inside of his live streams, I will listen to it on 3 times speed. Okay, and then you can consume the content 3 times faster. But with these crazy 3-hour, 4-hour live streams, I mean, you need to consider 4 times speed. Okay. Right, guys, here on the 4-hour time frame, let's discuss the highest probable scenario that everyone is talking about. Okay. I do not like that everyone is talking about the scenario, because when everyone is watching a scenario, so it most often doesn't play out, but it is the highest probable scenario. And I think that is why everyone is talking about it. Okay, the highest probable scenario is this little scenario over here. Okay, we have formed a 1, 2, 3. It's done. Number 3 is done. And we are now busy with a 4th wave. Now the question is 4 done? Or is 4 still going to extend a little bit and then fall to the downside? So the highest probable scenario is for this consolidation to form a wave 4. Whether we still go up, part of a corrective structure, or whether we start falling to the downside, there are Elliott wave counts that supports both. Unfortunately. Okay. But the good news is 4th waves Okay, just to summarize, well, just to go through the structure, you've basically formed a three-wave structure in W, sideways triangle structure in X, and you formed an ABC to complete your Y wave to the upside. Now, okay, you want to see an impulsive wave build to the downside. So for the bears, this low needs to be claimed again. The good news is after the low is claimed, okay, there's not a high probability at the moment. Okay, it's a low probability. It can always happen, but it's not a high probability for price to absolutely capitulate to the downside, because the biggest move already happened inside of this structure. It's very rare to see a big move like this repeat itself within the same structure. It's the easiest way that I can explain it. Okay, so if we do claim the low again, I expect a bounce in the zone. Okay, there's a daily level. Let me switch on my daily levels. There's a very interesting daily level here to the downside at 85. Can you guys see it? At $85,500. Let's just call it a round number. It's a very interesting daily level that I will be keeping an eye on, because once you have a 5-wave structure, the structure has to correct itself. Okay, you don't know how high the correction is going to go, but there's a chance for some nice upwards momentum. Okay, so I will be very interested in longs over here. Fourth waves, guys. If this is the fourth wave forming over here, they are extremely difficult to trade. So if you've been staring at the chart and you're just like, I don't know what to do, please do not feel alone. Even experienced traders, okay, struggle to trade consolidation areas inside of fourth waves, because they are usually very complex corrective structures. Okay, second waves are usually easier because you get those nice little zigzag structures, and then fourth waves, I have those long W, X, Y triangle in the X wave, or the B has a triangle. You really just don't know which way it's going to go. Okay, but you do have some targets. Okay, some interesting targets. Let me take the scribble here out the way. When you take a fib from number 2 to number, okay, let's just take the lowest peak down here. I just like to play it safe. I actually had a conversation with a community member this morning, because he did ask me the question, where do you put 3? Okay, for simplicity's sake, here on the 4-hour time frame, I just like to use the highest point and the lowest point. Okay, give the structure a little bit of room to breathe. Okay, so the fourth wave has already claimed the 0.382, which is a very, very common target for a fourth wave. Your maximum target is the 0.5. Okay, your 0.618 is an invalidation for a fourth wave. So if the structure moves up and it claims the 0.618, there's a much higher probability that you're going to go and claim that high. Okay, because then the impulse is done. And then you have a 3-wave structure to the downside. And when you have a 3-wave structure, you claim the 0.618 is always a good chance you're going to go and eat up that high. Okay, so now I've explained this structure. For the moment, this structure does carry the highest probability. What concerns me about this structure is that everyone is talking about it. I see it all over social media. Okay, some people, you might not, you don't even have to know Elliott wave theory. Just based on the aggressive momentum to the downside, people are expecting a correction and continuation to the downside. Okay, but I do, with high probability, expect a bounce in the zone. Okay, to at least play a correction back to the upside. And usually what happens is, just from a tip, okay, a little bit of a tip of the trade, usually what happens is, let's say your fourth wave is in, okay? Usually, in most instances, your corrective structure claims these highs. So that is still an amazing trade here to the upside. Whether it wants to then dump to the downside or have a little bit of a more of a deeper rally, it doesn't really matter. I just want to take advantage of that move. I'm looking for a long profit taking area. Okay, and make no mistake, I will be taking profits to the upside. I'm not going to just leave a TP here and hope for the high to be claimed and then it has a shallow correction and it falls to the downside, because I have seen, okay, and I'm sure you have as well, when you take then a fib from the high to wherever this low is going to be, I have seen corrective structures when the momentum is aggressive in one direction. Okay, this can play out where it taps the minimum fib target. Okay, and it falls down. And we are all waiting for at least one of these fib levels to be hit. And it doesn't. So that's why I will be taking profits to the upside. Protect position. Leave a runner open. Okay, so for the moment, this is unfortunately, okay, the highest probable scenario. From a day trading perspective, I actually don't care whether it's a high probability or low probability. I just have my levels ready. I know from a trading perspective, I don't care whether we're going to $50,000. I don't care if we're going to $100,000. But I know based on the structure that is going to form here, I know how to trade it. Because if price falls down, I will be looking for a long, because then I have a 5-wave structure. If price moves up, claims the 0.618, then I'm going to be looking for longs in the zone. Okay, if there's a little retracement to go and claim that high. So I really don't care. The structure will show me how to trade it. And I don't think that message sinks in for a lot of people. Moment of silence so that the penny can drop. And I think for most of you, the penny has already dropped. We're just looking for a trading opportunity. And the structure will show us which one to trade. Okay? Yeah, on the 4-hour time frame, you're going to have to be patient. You're going to have to be really patient. If you're trading this little structure here, okay, like a crazy maniac, if you took 10 trades, 5 trades inside of this little structure, well, then you're most likely a scalper. And I know that scalpers struggle. I know scalpers struggle. Okay, unless you are a successful scalper. Okay, so this scenario is at the moment the scenario that carries the highest probability. Finished WXY. 3-wave structure in W, triangle in X, and an ABC in Y. Done. Okay, we're now looking for an impulsive structure, correction, continuation to the downside to come and eat up the low at $80,600. I hate, I feel like I'm contradicting myself. It's the highest probable scenario, but I hate that everyone is watching this scenario. So maybe, just maybe, something else is going to happen over here. Okay. Right. And I'm going to zoom into the structure now, legends. I'm going to zoom into the structure, more specifically this little consolidation area that we have formed. This little, that's the local bullish. This little one is still on the cards. Okay. This structure is still in the cards, but maybe before I continue to discuss this structure, there's something that I just quickly want to share, guys. In the description of this video, okay, the first link, it says, watch my free course. So there's a module inside of my advanced section of the course, the D-line strategy, that you can get free access to. You can go watch it here by selecting this link. You can go follow the steps. You can go watch that module, because that module is so powerful that it actually gives you everything you need to execute that specific strategy. And then obviously there's way more. They are going to, if you want the full course or my PDF book, go and select the link, scratch around. Okay, let me select it over here just to give you a feel of, that's basically me. Okay, that's my story. If you want to go and watch my story, this is where I talk about my D-line breakout strategy. It's my first trading strategy that turned me profitable as a trader. And the reason I hammer on this strategy, because it's so simple, especially when you're starting out or you're still struggling. Maybe you're overcomplicating your trading strategy. Maybe you're trying to jump into Elliott wave theory, but you haven't even mastered a simple strategy like this. Okay, maybe you need to take a step back, but go and check it out, guys. Some testimonials. Okay. And then, yeah, you can just go and watch the free 45-minute course that I've put together here. Okay. Right. Now, let's continue. There's a chance in this scenario, very similar to the previous scenario, you still have your three-wave structure in W, you still have your triangle, complex corrective structure in X, but Y did not finish here. This is an A wave. This is a B wave, and it did tap a flat target, and now we're still going to go up for a C wave. Maybe come and claim 100K again. Okay, that's definitely still on the cards. For the moment, this local structure does not look good. Okay, it really doesn't look good. I'm going to dive into the structure now and show you why it doesn't really look good for continuation here to the upside. So it is a low probable scenario, but perhaps the scenario that will catch everyone off guard. Okay, so in this scenario, you could still go and finish your Y wave at 100K, okay, maybe even inside of this box, 105K, before price then takes the low. What is important to me as a technical trader is, okay, because then you're basically counting this structure as a three-wave structure, and as long as this low is protected, there's a chance, there's always a chance that you could move higher. Claim that 0.618, okay, and go higher. Right. But the local structure doesn't really look convincing, so maybe that's where we need to jump into now. Okay, so let's go and look at that local structure. Can we still get upwards momentum? Right, let's go on to the 15-minute time frame. Okay, so now, most obvious, what we are all looking for inside of this local structure is that we formed a 1, wherever you want to put your 2. This is your 3, okay? Maybe 4 is done, and we're going to go down for 5. Remember, the fourth wave can still extend. So without going and counting the structure like a crazy maniac, basically what you want is you do not want the 0.618 to be claimed. As long as the 0.618 is not claimed, whatever happens here, there's a chance you're going to take this low. And then once you see a 5-wave structure, you're looking for a bounce back to the upside, correction, and continuation to the downside. Okay, for the bulls, you want this to be an ABC. Okay, so let's grab the ABC. You want this to be an A, B, oops, and a C. Okay, let me just drag the B to this side. There we go. You want this to be an ABC. Not the highest probable scenario, unfortunately, but I have to talk about it because it hasn't been invalidated. And then inside of your C wave, you have formed a 1, 2, 3, 4, 5. So it should be done. You don't want that low to be taken again. Now, the problem is this. This is now the problem. Okay. If this is C, you want to build an impulsive structure back to the upside. And it's not off to a great start, because now when I zoom in here, like I've highlighted during the beginning of this live stream, it is so rare to see a way. You remember, you want to build an impulsive structure, so you have to label that a 1. That's your impulse to the upside. And now you have to label all of this your 2. And you want to go up for a 3 and a 4 and a 5. Okay. This correction, like I said during the beginning of the live stream, guys, I'm just explaining to you how you determine probabilities. Okay. You can't trade on hopium. You have to trade on probabilities. When you take a time flip from the low to the high, you can see that this correction is 7 times longer than the impulse. And for a wave 1 and 2, that is low probability. You'd rather want to label this A and a B. And then maybe we go up for a C and then we fall down. So basically, you do not form this structure. That to me makes more sense. You do not do that. So if the bulls still have control here on the short term, you still want to see a C wave extend here. Maybe this is your 1, your 2, 3, 4, 5. But then after your 3-wave structure, you want to fall down. If the structure builds that, then we could form that bigger C wave to the upside that could take us as high as $100,000. but the probabilities are not in the favor of the bulls at the moment. Yes, we can still get upwards momentum. Okay, but I think there's a higher chance that the upwards momentum can form an ABC. A, B, C. Okay, and we have some nice targets for this ABC. A, B, C. Minimum target being the 0.618. Most common target being your 1-to-1 extension. Okay, and then you want to count this structure as an impulsive structure because wave C has to be an impulsive structure. So this can be a contracting diagonal 1, 2, 3, 4, 5. I did see people post this scenario inside of our community. Guys, the reason, because I see people ask me, Dewald, why are you not posting the contracting diagonal? Okay, why are you saying that this is a 1? Okay, this is a 2 in a flat, ABC flat, and then we're going to form a third wave here, maybe 4, 5 to the upside. Because corrective structures always takes priority, okay, or a normal structure always takes priority over a diagonal. So yes, it can be a diagonal, but it doesn't really matter. Okay, it's the same result. Okay, and maybe this is a little bit of education. Whether you count this as a diagonal, okay, where you've basically formed a 1, 2, 3, 4, 5, and this is your zigzag correction structure and you want to see continuation to the upside, or whether you count it like I did as a 1, 2, 3, 4, 5, it doesn't matter because you're looking for that. Same result. You're looking for a short. You're looking for upwards momentum. You're looking for a long over here to get the... So it doesn't matter whether it's a diagonal, whether you're counting it as an ABC flat, diagonal, 1, 2, 3. It doesn't matter. It's the end result. So, you know, when the structure gives you this same end result, I'm not going to go and sit there and debate and say, but it is a diagonal. No, it's not a diagonal. It doesn't matter. Okay, it doesn't matter. So for the bulls, basically, you do not want this low to be claimed. That low should not be claimed for the bulls. Okay, if there's still a chance for a little bit of upwards momentum. And then you basically form your A, your B, your C here to the upside, you reject, you fall to the downside, come and claim the low, and then you can start that impulse of momentum to the downside. Okay, and I do think a momentum here to the upside has a higher chance of being corrective than impulsive. Okay, to label this a 1 and this a 2, I've explained to you guys from a timing perspective, technically it's just not the highest probability. Okay, right. Now, bearish case scenario. Okay, I always have to put the bearish hat on as well. Let me do this. Okay, let's put Mr. Red there in the background. Let's talk a little bit bearish. Right, there's a scenario that I was playing around with this morning. Let me just take all the scribble there out the way. Local WXY. I am very aware of this scenario over here. Okay, I just need to update it a little bit. There we go. Okay, there is a chance that if your impulse to the downside ended over here, and all of this is part of a corrective structure, you could have had your ABC in a wave A, B, C in a W. Okay, so you basically have an A, B, C and a W. You formed a W, X, Y inside of your X wave, and now you formed your ABC to complete your Y. Because X tapped the 0.78 Fibonacci, it is very common for your Y not to take the high of W. So just keeping this in mind that you can dump from where we are right now. Then for this scenario, just to keep it simple, your invalidation is the high. So you build an impulse to the downside, correction, that's your shorting opportunity, okay? And then you want to fall down in a 3, 4, 5. There's another opportunity to get into the short. Because you can either get in there or you could wait for confirmation. I would rather wait for confirmation. I don't want to short over here. But maybe you want to catch the move early. You want to take advantage of this move. Okay. I would rather wait for the 5-wave structure down. It's just part of my trading rules. Okay, I would rather wait for price to fall and form a 5-wave structure, because once you have the 5-wave structure, you expect a correction. Remember what I said, at least above the 4th wave over here. That is your shorting opportunity, because once you have formed your impulsive structure here to the downside and a 3-wave up, you get 3, 4, 5. So I want to take advantage of that move. This is 1, 2, 3, 4, 5. You guys get the idea. Okay. Remember to smash up that like button if you have not done so already. B is allowed to be 7 times longer than A. Just asking. It's more common for a B to be much longer than A than for a 2 to be longer than 1. Because it's not preferred, but I have seen that play out on Bitcoin. So maybe that answers your question. Hey Dewald, A Trader, welcome to the live stream. Always great to see you here. Mr. A Trader, welcome, welcome. Hi everyone, Mr. Nico, always appreciate the moderators here in the live stream, keeping the energy high. Hi Dewald, hello legends. Dewald, tell me how you prepare yourself for trading psychology, because I often feel stressed when I trade. It is by following my rules. Just from the top of my head, the best way that I can explain it is I have a checklist that I tick off in terms of position size, where I put so I plan my trade. I don't just enter, okay? I plan my trade. I tick my checklist and I enter with a specific position size depending on how far my stop loss is. My stop loss usually determines how much capital I deploy, and the more boxes I tick off, it also tells me how much capital is at 1%, 2%, 3% of my capital that I'm going to risk for the trade. And then it's the checklist that keeps me profitable. Okay, so what stresses me out is if I enter a trade and I did not tick my checklist, maybe I went in too heavy, that's when I stress about my trade. That's when you want to blow that candle to the upside. Okay, I've seen the memes going around. So the other answer that I can give you, because it's a really good question, the other answer that I can give you is if you're stressing about the trade, you've most often when people stress about trades, they've risked too much. Okay, because I can tell you now, if I've risked 1% with this trade, maybe I caught, maybe I entered over here. Okay, which I did. Okay, but if I entered with 10% of my capital or 20% of my capital, I would be stressing now. I don't even think I'll be able to do a live stream. Okay, but if I entered with 0.5, I think I entered with 0.5% of my capital. It's a small little scalp that I'm playing here to the upside, because I'm giving the bulls the benefit of the doubt. Okay, we've had, and this is something that I saw. Okay, guys, I mean, look at this. Okay, CVD. You fall every time you make a lower high. Okay, you guys can see here, lower high, lower high, lower high, and you have CVD absolutely rampaging here to the upside. So you have the opposite. You have price falling down, you have CVD climbing to the upside. That is not a sign of strength. Okay, but all of these CVDs has played out, because every time you made a lower high, you claimed the low. You make a lower high, you claim the low. You guys get the point. So all of this CVD has played out. So I don't pay attention to it anymore. I now pay attention to what's happening here. And now you can see what's happening here is that since we made this low, we started almost getting a little bit of, okay, prices moving up. Just from a general direction perspective, prices moving up, CVD is falling down. That's what I like to see. That gives me a sign of strength. Okay. So yes, I am. Let's see, guys. There's a chance that this is your 1, 2, 3, 4, 5. There's a chance we can form a little bit of upwards momentum here. And something that I did post just before the live stream to the community is to say that, well, guys, last chance for the bulls. Okay, this is your last chance for the bulls. We bounced here, almost at the 786. Beautiful area for second wave. Okay, maybe this is your ABC flat. This is your impulse, ABC flat. If there's any chance for the bulls to break to the upside instead of down, this has to be it. This has to be it. And this is why I took a shot over here, and I was monitoring CVD as well, because if it kept on climbing to the upside, there was no ways that I was going to enter this trade. Okay, but when we dropped here and we started moving up and CVD started reversing back to the downside, I was like, okay, it has a chance. I'm going to enter 0.5% trade with my capital here, which means that if I get stopped out, I lose 0.5% of my trading portfolio. Okay, and I'm very comfortable to lose that trade without stressing about it. But if I entered here with a $10 million position, yeah, then I would be stressing. Okay, it's usually, okay, and I'm sure a lot of you guys can relate as well. Usually, just think back about your previous trades. Usually when you stress about a trade, maybe you leave, you know, it's running through the night, you wake up during the night, you're watching your phone, you go back to your computer, you can't sleep, you dream about the trade. Okay, that's usually when you've risked too much. You've got way too much capital on the line. Just be honest with yourself. I can tell you now, I mean, I've been through it, guys. I've been through it. I know for a fact the times when I couldn't sleep and the times I was stressing about a trade is because I went in too heavy. The times where I just like, ugh, it looks good. Let me open up a 0.3% trade over here. Okay, you can leave the chart, you can go to gym, you know, you come back to the computer, it's like, oh, it played out, nice. Oh, I got stopped out. Okay, then let's look for the next trading opportunity. Right, so there's a chance for the bulls, but I'm very aware also, guys, and this is why I went in light with this position. I'm also very aware of the bearish scenario where you fall down. Your W, X, Y is done. Okay, W, X, Y is done. Y does not have to claim the highs because this little pivot claimed the 0.7 Fibonacci. Okay, let me explain there quickly. I like to re-explain these things because, you know, people learn. It's a lot of information to absorb. Okay, so in this scenario, if this had to play out, if I take a fib, okay, W started over here. Okay, because you have a three-wave structure and an A wave. You have your B and you have your C. So W started over here. And I take it to the top of W and I drag it across. You can see that your X wave, okay, WXY, and tapped the 0.7. And usually when your X wave taps the 0.7, Y does not have to claim the lows. In fact, it's preferred that it doesn't claim the highs. Sorry, the highs, not the lows. Okay. And this is also what we refer to as a sideways correction. Okay, it can still form a triangle. Guys, it's still early days. It can still form a triangle over here. Maybe it's going to morph into something else. Okay, corrective structures, they tend to only reveal themselves when they're about finished. And maybe it's still going to continue. Maybe it's still going to go up here in a, like I said, in the bullish case scenario. Maybe it's still going to be your 1, 2, 3, 4, 5. Then I'm going to have to recount the structure and say, well, what happened now? Okay. But I can trade it, and I'm already in a trade. Okay. Right. But I'm only interested in a short. Yeah. I'm not really interested in a short in this zone. Okay. But I mean, you do have a clear invalidation. There's your invalidation for this scenario. If your WXY is finished, you do not want to claim this high again. Now you want to build impulses to the downside. 1, 2, 3, 4, 5. This is where I'll be looking for a shorting opportunity, but the structure has to show itself to me. Okay, if it continues, then I know, okay, I have to now recount the structure. Maybe it's something else. Okay, it could be that sometimes, guys, the counts doesn't matter to me. Okay, I just trade the local structure in front of me. Okay, sometimes I only look at that. That's it. I ignore the rest because I just want to day trade. That's it. Okay, this structure looks like it could be bullish, either in a diagonal or in a 1 ABC flat. Done. Okay, there's a chance to go and claim these highs again. Bearish CVD all the way down here, and now when we started climbing up, some bullish CVD forming. Okay, or at least a sign of strength. So I'm just looking for a day trading scenario. Once the structure, maybe, you know, it goes up here, then the structure is going to reveal itself. And I'm going to be looking for shorting opportunities there to the upside, because you have to have your levels ready. Point of controls, daily levels, switch on your levels, make sure that you have them all marked out. So if price does continue here to the upside, well, we still have an untapped point of control at $90,000, 968. I also know that if this is a fourth wave and it's still going to continue to the upside, okay, you ideally do not want to claim the 0.618. So this looks like a very interesting shorting zone, because if this is the end, okay, and maybe this is a B, C, that's maybe how the structure is going to reveal itself if it does go here to the upside. This was the end. This is A along as B, and now you're forming your first wave inside of your C wave. 1, 2, 3, 4, 5, and then it falls to the downside. And basically all you formed was A, B, C. Very simple. Okay, so right. That's where I will be looking for the trading opportunities. Very interesting shorting area, 0.5, which is also a maximum target for a fourth wave. Okay, and then there's a chance for price to fall down here in an impulse, but the structure, like I said, has to reveal itself. Okay, that's my shorting opportunity. And right, remember guys, down in the description, if you want to see my free training course, okay, so maybe just to explain it again, inside of my full course, there's a module called the D-line strategy. So I've made that available for free. Only that one module, but that module has so much alpha inside of it. And it's also the first trading strategy that turned me profitable as a trader. Okay, if you want to go and check out what it's all about, here's the page, go scratch around. I have a trader playbook. If you just want to dibble your toes in the water, that also explains to you everything you need from a trading perspective. It actually goes into a lot more detail. Okay, I have the free training and then obviously the full course as well. So first link down here in the description. And these are basically the scenarios that I wanted to discuss. Okay, maybe I can put myself back on blue here so it doesn't look so dangerous. Dewald with top Friday prep. 4-hour hidden bullish divergence getting ready to fall. Okay, I haven't actually looked at RS. Guys, I very seldom look at RSI. The only indicator I use to trade with is CVD. I don't use any other indicators. But it is sometimes interesting to see what other people are watching. Okay, I used to trade with RSI. But then I was just like, it's so unreliable. Okay. 4-hour, you said 4-hour hidden bullish. Oh, I see what you mean. You're basically saying that if we do fall, okay, there's a high chance. If we do fall here to the downside and we claim this low, there's a high chance you're going to form bullish CVD. Yes. And in Elliott wave theory, it's actually very interesting. They do say that when you form the last wave inside of the structure, it's usually supported by bullish CVD or hidden bullish divergence. Okay, you want to see that. You want to see that. But there's a high chance when this is a 5-wave structure. Remember, guys, the target, now, even here from an RSI perspective, the target for this hidden bullish divergence that's potentially forming over here, if you do claim the low, is that little pivot. That's your target. Based on, yes, because it was formed, your pivot over there was formed over here. So the highest point of that structure, that's your target. So do not think for one moment, and I think this is maybe where some people, when they start out, get it wrong. They see hidden bullish divergence, 4-hour time frame, and they're like, whoa, that is the longing opportunity of a lifetime. Okay, and then what happens is price does this, and it continues to the downside. Okay, it claims the target because people don't know where to take profits. That's the problem. Okay. What else is here? No tariffs implied on the like button. Mr. Rudy. Yes, I mean, I think, is that like button bearish here at the moment? Let me check it out. Is the like button bearish? Yeah, it looks like the like button is a little bit bearish compared to how many people we've got here watching at the moment. Is there a bullish scenario? Is it safe to enter a trade when the upwards momentum ends in 5 waves, yes, then you have to wait for the retracement. You have to wait always for the retracement. Okay, so for example, if this structure forms a 5-wave structure, 1, 2, 3, 4, 5, this is not where you short. It's the worst place to short. Okay, this is not where you short, because after each 5-wave structure, you at least expect a 3-wave retracement. That is where you short. Because if you put your stop loss above this high, okay, expecting momentum to still continue to the downside, you want your entry as close as possible to your stop loss. You don't enter here and now you're underwater and you're doubting yourself, and then you get out of the trade and then price falls and you're like, crap. The trade, it did do what I wanted it to do. It just went up first. No. Okay, each 5-wave structure has to correct itself. So yeah, on the local time frame, for example, very interesting. Who highlighted that? Yeah. But yeah, anyways, very interesting that hidden bullish divergence on the 4-hour time frame. I like to see that, especially for 5-wave structures. I just need to take these brushes here out the way, okay, because they're going to irritate me the whole time. Okay, so yeah, on the 15-minute time frame, if you see a 5-wave structure to the upside, the retracement is always interesting. Okay, that is definitely a shorting opportunity. Definitely, that's a shorting opportunity. But if you see a 5-wave structure to the upside, that's not where you long. You wait for the retracement. Because what could happen is you get a 3-wave structure retracement. Why has my pen disappeared? Okay, you get a 3-wave retracement. You enter, okay, in the zone. You take your fib from the high, from the low to the high, maybe the golden pocket 786. You enter, and then this happens. Okay. And then price starts to move up. That's usually where I get out. Because now you have a 1, 2, 3, 4, 5. When I see a 5-wave structure down and I see price moving back up and I entered a long over here, that's usually where I take profits and I start looking for shorts. Because even though you have a 5-wave up, you could now form impulses back to the downside, because this could be a C wave. If it's a wave 3, you want to see a larger 4 and a 5. Anyways, guys, it can get very, very, very complex, but it does become easier with experience. Right, that is, imagine is very dark. That's interesting. Did not know that about RSI. Yes, thought like you said. If I see bullish divergence on the 4-hour going to Valhalla, yeah, guys, it plays out so often, and I actually forget about. And this is the reason I still have RSI on my chart. I just keep on forgetting to watch it at RSI. Is when you have a 3-wave structure, you're busy with wave 4, and you're still expecting that last little wave to the downside. You usually, most often, you have bullish or bearish divergence depending on whether the 5-wave structure is going up or down. Okay, because it happens even in the previous bull cycle. It happened. Okay, here on the daily time frame. Okay, you have. Okay, well, Binance doesn't have previous price action, but you basically had a 1, a 2, 3, 4, 5. And between those two pivots, guess what? Okay, you want to see bearish divergence between those two pivots. And what happened? We had bearish divergence between those two pivots. Okay, can you guys see? I think it was on the weekly, but you guys can see there's bearish time. I think it was actually on the weekly time frame. Just wait for it to load up. Okay. Binance doesn't have a, but I mean, there was massive bearish divergence. Look at this. On the weekly time frame, look at this. Higher high. Okay, look at this. Whoops. Let me do this. There we go. Lower high. Massive bearish divergence on the weekly time frame between those two pivots. And that's usually what you see with your last impulse to the upside after your 3rd wave is in. Very interesting. Okay, Have yourselves an amazing weekend. Remember, guys, if you want access to my free training course, the 45-minute D-line strategy, PDF book, full course, links for the exchanges that I use to trade, always down in the description. Have yourselves an amazing weekend. Enjoy Andy's live stream if you guys are going to jump onto Andy's live stream. Until the next one, cheers for now.